Hey there traders, welcome back for episode 85 from the StockBandit.tv. It's a place you can always find trading videos to make you better. And on Sundays, you can find updates here for the major market averages as we head into a brand new week, because of course that's where most individual stocks are going to find their influence. We're going to see the overall market rallies. It's going to take a lot of stocks with it and vice versa to the downside. So as we take a look at the big picture, we're going to examine the Nasdaq and the S&P 500 and the Dow. Well, last week obviously we saw huge rallies and it really was very impressive. Not only did each of the indices tack on over 7%, but they did so in just a matter of a few days. So it was incredibly impressive. Now, as we look a little bit closer here on the chart, I want to point out something here that I've been mentioning, and by setting this up and kind of clarifying here what the stage, how the stage was set, it helps make a lot more sense as to why this move became so dramatic to the upside. Okay, now what we had in place was a lower high that's already been confirmed with the establishment of a lower low in the near term. So what it looked to be was this market was possibly going to start doing a little bit of correction, which is certainly okay given the sheer size and the magnitude of the rally from the March lows. So even if that did happen to play out, it wasn't going to be such a bad thing. It would have likely resulted in a higher low, meaning unlikely would have moved all the way down to test the March low, and maybe would have established some higher low on the bigger picture from which to rally again from and possibly set up another leg up within this uptrend. So as I zoom back in on the chart, we've got obviously this lower high and lower low that had been established, but when we never, I should say, we came down and created this lower low, and then we just kind of sat here for a couple days. You see this very quiet price action here. Also note the very quiet volume that accompanied that. There wasn't a whole lot going on, and so then when we got this big move up on Monday of last week, it caught a lot of traders off guard. They then started having to cover shorts, and that really provided a lot of emotion to go with this move. And so what we did see was 5 straight up days for the Nasdaq and a tremendous surge higher. We also saw this big gap right here form on Wednesday morning, and now we're at a point, if I zoom back out on the chart a little bit here, we're coming up into this 1905 area, which is only about 19 points away. That is from last October, and that's where an unfilled gap still stands on the Nasdaq, and it starts at 1905 at the lower end and extends on up to about 1947. So if we can clear this 1905 hurdle, it may provide even a further boost to move on up and fill this gap from last fall. However, we've come a very long way in just a short amount of time, and so some kind of a rest would not be a bad thing at all. So emotional market, huge surge higher, lots of stocks just turning out of short-term corrections and taking out their recent highs in some cases like the Nasdaq. And then of course you move into the S&P and the Dow, and the picture is slightly different here. We did test this 875 level, which has been not only support but also resistance in recent months. So that's a very key level. So to see us sell off and rest on that level was no big surprise. However, once we started to turn higher, it really opened the door for just continued surge here. This index tacked on 7% last week as well. It's now sitting not far at all from the June high, which is the recovery high from the March low. That's at 956. If this index can push through 956, then it's got a shot to come back up out here and test this November high at 1007. So those are the levels I'm watching there. And for the Dow, we had this 8200 support zone, this lower blue line, and we had 8600 resistance that was up here, the upper blue line. Not only did we take out 8200 to the downside and then kind of stall, but once we ripped back up into that trading range, we saw this index just clean move all the way through that. back to the upside, back above 8,600. So at this point, it's sitting not far from the June high, which is right there. That's at 88.77. And then above that, we've got a few areas up here that are in the same vicinity. We've got the high from January at 9,088. We also have this congestion area that really found a lot of resistance in here in the 89.50 area. So we've got a number of resistance levels that are just not far ahead for the Dow if it does continue higher. But again, this index is most likely going to follow the S&P and the Nasdaq's lead. This is only 30 stocks, so it's likely going to be influenced by these other two primarily, okay? So as always, thanks for joining me. I hope your trading week gets off to a great start. I will be back soon with more videos, but in the meantime, trade like a bandit.